This is chapter 2, podcast number 2. Okay. Maintaining professional skepticism. The auditor shall maintain professional skepticism throughout the audit, recognizing the possibility that a material misstatement due to fraud could exist. Notwithstanding the auditor's past experience of the honesty and integrity of the entity's management and those charged with governance. Unless the auditor has reason to believe the contrary, the auditor may accept records and documents as genuine. If conditions identified during the audit cause the auditor to believe that a document may not be authentic or the terms in a document may have been modified but not disclosed to the auditor, then the auditor shall investigate further. When responses to inquiries of the management or those charged with governance are inconsistent, the auditor shall investigate the inconsistencies. Discussion among the engagement team. The discussion among the engagement team shall place particular emphasis on how and where the entity's financial statements may be susceptible to material misstatement due to fraud, including how fraud might occur. The discussion shall occur notwithstanding the engagement team members' beliefs that the management and TCWG are honest and have integrity. Risk assessment procedures and related activities be geared towards obtaining information for use in identifying ROMM due to fraud. When performing the risk assessment procedures and related activities to obtain an understanding of the entity and its environment, including the entity's internal control, the auditor shall perform the procedures to obtain information for use in identifying the risk of material misstatement due to fraud, like inquiries of management and others within the entity, obtaining understanding as to how those charged with governance exercise oversight of management's process for identifying and responding to the risk of fraud in the entity and the internal control that management has established to mitigate these risks and evaluation of unexpected relationships identified in performing the analytical procedures which may indicate a risk of material misstatement due to fraud. Besides, as discussed earlier, the auditor shall evaluate whether the information obtained from the other risk assessment procedures and related activities performed indicates that one or more fraud risk factors are present. Responses to the assessed risk of material misstatement. I repeat, responses to the assessed ROMM due to fraud at the financial statement level. In determining the overall responses to address the assessed risk of material misstatement due to fraud at the financial statement level, the auditor shall assign and supervise personnel taking account of the knowledge, skill and ability of the individuals to be given significant engagement responsibilities and the auditor's assessment of ROMM due to fraud for the engagement. B. The auditor shall evaluate the selection and application of accounting policies by the entity, particularly those related to subjective measurements and complex transactions, may be indicative of fraudulent financial reporting resulting from management's effort to manage the earnings. And the auditor shall incorporate an element of unpredictability in the selection of nature, timing and extent of audit procedures. Audit procedures responsive to assessed ROMM due to fraud at the assertion level. The auditor shall design and perform further audit procedures whose nature, timing and extent are responsive to the assessed ROMM due to fraud at the assertion level. In doing so, the auditor may change nature, timing and extent of audit procedures to obtain audit evidence that is more reliable and relevant or to obtain additional corroborative information. For example, if the auditor identifies that management is under pressure to meet the earnings expectations, there may be a related risk that management is inflating the sales by entering into sales agreements that include terms that preclude the revenue recognition or by invoicing the sales before the delivery. In these circumstances, auditor may, for example, design external confirmations not only to confirm the outstanding amounts but also to confirm the details of the sales agreements, including date, any rights of return and delivery items. In addition, the auditor might find it effective to supplement each external confirmations with inquiries of non-financial personnel in the entity regarding any changes in the sales agreement and delivery terms. Audit procedures responsive to risk related to management override of controls. Audit procedures responsive to risk related to management override of controls. Management is in a unique position to perpetrate fraud because of management's ability to override and manipulate the accounting records and prepare fraudulent financial statements by overriding the controls that otherwise appear to be operating effectively. This risk is present in all entities. Due to the unpredictable way in which such override could occur, it is a risk of material misstatement due to fraud and thus a significant risk. Irrespective of the auditor's assessment of the risk of management override of controls, the auditor shall sign and perform the audit procedures to test the appropriateness of journal entries recorded in the general ledger and other adjustments made in the preparation of the financial statements, review the accounting estimates for biases and evaluate whether the circumstances producing the bias, if any, represent a ROMM due to fraud for significant transactions that are outside the normal course of business for the entity or that otherwise appear to be unusual given the auditor's understanding of the entity and its environment, and other information obtained during the audit. The auditor shall evaluate whether the business rationale of the transaction suggests that they may have been entered into to engage in fraudulent financial reporting or to conceal the misappropriation of assets. The auditor shall determine whether in order to respond to the identified risk of management override of controls, the auditor needs to perform other audit procedures in addition to those specifically referred to above. Evaluation of audit evidence. The auditor shall evaluate whether analytical procedures that are performed when forming an overall conclusion as to whether the financial statements as a whole are consistent with the auditor's understanding of the entity and its environment indicate a previously unrecognized risk of material misstatement due to fraud. I repeat, the auditor shall evaluate whether the analytical procedures that are performed when forming an overall conclusion as to whether the financial statements as a whole are consistent with the auditor's understanding of the entity and its environment indicate a previously unrecognized ROMM due to fraud. When the auditor identifies a misstatement, the auditor shall evaluate whether such misstatement is indicative of fraud. If there is such an indication, the auditor shall evaluate the implications of the misstatement in relation to other aspects of the audit, particularly the reliability of management representations, recognizing that an instance of fraud is unlikely to be an isolated occurrence. I repeat, when the auditor identifies a misstatement, the auditor shall evaluate whether such a misstatement is indicative of fraud. If there is such an indication, the auditor shall evaluate the implications of the misstatement in relation to other aspects of the audit, particularly the reliability of management representations, recognizing that an instance of fraud is unlikely to be an isolated occurrence. If the auditor identifies a misstatement, whether material or not, and the auditor has reason to believe that it is or may be the result of fraud and the management is involved, the auditor should re-evaluate the assessment of the risk of material misstatement due to fraud and its resulting impact on the nature, timing, and extent of the audit procedures to respond to the assessed risk. The auditor shall also consider whether circumstances or conditions indicate possible collusion involving employees, management, or third parties when reconsidering the reliability of evidence previously obtained. When the auditor confirms that or is unable to conclude whether the financial statements are materially misstated as a result of fraud, the auditor shall evaluate the implications for the audit. Next heading, auditor is unable to continue the engagement. If as a result of misstatement resulting from fraud or suspected fraud, the auditor encounters exceptional circumstances that brings into question the auditor's ability to continue performing the audit, the auditor shall determine the legal and professional responsibilities applicable in the circumstances, including whether there is a requirement for the auditor to report to the person or persons who made the audit appointment, or in some cases to the regulatory authorities. And the auditor shall consider whether it is appropriate to withdraw from the engagement, where withdrawal from the engagement is illegal and permitted. Auditor shall discuss with the appropriate level of management and TCWG the auditor's withdrawal from the engagement and the reasons for the withdrawal, and if the auditor withdraws, determine whether there is a professional or legal requirement. Okay. If the auditor withdraws, discuss the appropriate level of management and TCWG, the auditor's withdrawal from the engagement and the reasons for the withdrawal, and determine whether there is a professional or legal requirement to report to the person or persons who made the audit appointment, or in some cases to regulatory authority, the auditor's withdrawal from the engagement and the reasons for the withdrawal. Management representations. The auditor shall obtain written representations from management, and where applicable TCWG, and where applicable those charged with governance, that they acknowledge their responsibility for the design, implementation and maintenance of internal control to prevent and detect fraud. They have disclosed to the auditor the results of management's assessment of the risk that the financial statements may be materially misstated as a result of fraud. I repeat, they have disclosed to the auditor the results of management's assessment of the risk that the financial statements may be materially misstated as a result of fraud. They have disclosed to the auditor their knowledge of fraud or suspected fraud affecting the entity involving management, employees who have significant roles in the internal control, or others where the fraud could have a material effect on the financial statements, and they have disclosed to the auditor their knowledge of any allegations of fraud or suspected fraud affecting the entity's financial statements communicated by employees, former employees, analysts, regulators or others. Communications to management and with those charged with governance. If the auditor has identified a fraud or has obtained information that indicates that a fraud may exist, the auditor shall communicate these matters on a timely basis to the appropriate level of management in order to inform those with primary responsibility for the prevention and detection of fraud of matters relevant to their responsibilities. Unless all of those TCWG are involved in managing the entity, if the auditor has identified or suspects the fraud involving management, employees who have significant roles in internal control or others, where the fraud results in a material misstatement of the financial statements, the auditor shall communicate these matters to TCWG on a timely basis. If the auditor suspects fraud involving management, the auditor shall communicate these suspicions to TCWG and discuss with them the nature, timing and extent of audit procedures necessary to complete the audit. The auditor shall communicate with the TCWG any other matters related to fraud that are in the auditor's judgment relevant to their responsibilities. Communications to regulatory and enforcement authorities. If the auditor has identified or suspects a fraud, the auditor shall determine whether there is a responsibility to report the occurrence or suspicion to a party outside the entity. Although the auditor's professional duty to maintain the confidentiality of client information may preclude such reporting, the auditor's legal responsibilities may override the duty of confidentiality in some circumstances. For example, in case of audit of bank, the auditor has a statutory duty to report the occurrence of fraud to the supervisory authority, that is RBI. Also, in some entities, auditor may have a duty to report the misstatements to authorities in those cases where management and TCWG fail to take the corrective action. In some clients, requirements for reporting fraud, whether or not discovered through the audit process, may be subject to specific provisions of the audit mandate or related legislation or regulation. Documentation. The auditor's documentation of the understanding of the entity and its environment and the assessment of ROIMM required shall include the significant decisions reached during the discussion among the engagement team regarding the susceptibility of the entity's financial statements to material misstatement due to fraud, and the identified and assessed ROIMM due to fraud at the financial statement level and at the assertion level. I repeat, the identified and assessed ROIMM due to fraud at the financial statement level and at the assertion level. The auditor's documentation of the responses to the assessed risk of material misstatement required shall include, I repeat, the auditor's documentation of the responses to the assessed risk of material misstatement shall include the overall responses to the assessed risk of material misstatement due to fraud at the financial statement level and the nature, timing and extent of audit procedures and the linkage of those procedures with the assessed ROMM due to fraud at the assertion level, and the results of the audit procedures, including those designed to address the risk of management override of controls. The auditor shall document communications about fraud. The auditor shall document communications about fraud made to the management, TCWG, regulators, and others. When the auditor has concluded that the presumption that there is a risk of material misstatement due to fraud related to revenue recognition is not applicable in the circumstances of the engagement, the auditor shall document the reasons for that conclusion. I repeat, when the auditor has concluded that the presumption that there is a risk of material misstatement due to fraud related to revenue recognition is not applicable in the circumstances of the engagement, the auditor shall document the reasons for that conclusion. Test your understanding. Number 1. My Decor Limited, presently engaged in manufacturing of fabrics, wants to set up a new plant for manufacturing of special kind of fabric, providing an altogether different texture and feel. This kind of fabric has become a hit with retail customers. The company needs to set a plan for manufacturing the above kind of fabric, involving huge capital outlays to stay competitive in the market. You are the auditor of the company and find that the company's revenue has increased in financial year from 1,000 crore to 1,000 crore from 750 crore in the last year. By the time you started the audit, there was no change in plant capacity, and the information regarding a need to set up new plant has become known to you during inquiry of company's personnel. Discuss how you should proceed to deal with the above situation as auditor of the company, paying special attention to ROMM due to fraudulent financial reporting. Okay, this is test your understanding number 1, and test your understanding number 2. CA Riddhima, internal auditor of so and so limited, has pointed out the following deficiencies in the internal control of the company in her reports. Receivables are not reconciled at stipulated intervals. Customers are provided a credit limit based upon the track record. However, no review of customer credit limits is undertaken at required intervals. The statutory auditor of the company finds that no action has been taken by the company on the said deficiencies pointed out in reports of internal auditor. What does the above situation indicate to statutory auditor of the company? Okay. So with this, we are finishing essay 240. In the next podcast, we will read about essay 250, that is consideration of laws and regulations in an audit of financial statements. Do subscribe and give a like. Thank you. Have a nice day.